Hello everybody and welcome back to another video. Today the video that I'm going to be bringing you is basically on the higher time frames and why you really need to be aware of the higher time frames, see where price's actual intention is to go. So I thought I was going to do a trade breakdown for this video, but then I reconsidered and I thought I will save the trade breakdowns for people that actually want to go ahead and purchase a one-to-one, because that's where most of the value is really you understanding how we got into the market, how like I was looking at it and stuff, and you can just start learning and essentially just copy the strategy, right? But I'm going to leave that for the people that are paying because it's only fair. Don't want to give away too much source, but yeah, okay. So higher time frames, right? Let's say that this dashed line here represents the weekly, and this line here represents the daily, right? Okay, so if price is bullish here, and people are probably looking at this thinking, yeah, this is a really good zone here to buy here, or in fact, I'm going to change it to demand. People are probably looking here and thinking, yeah, I'll buy. Which, don't get me wrong, it is bullish. But this is why we need to be aware of the higher time frames, right? Because if we look over here, we can clearly see that the order flow on the higher time frame is what? Well, it's clearly bearish. Why is it clearly bearish? Well, because we're making high to lower high, breaking structure, lower low, lower high, breaking structure, lower low, and then ultimately what we're expecting is a lower high. And this here, this daily price action would be happening within all of these legs and in these ones, but more aggressive moves to the downside. So a lot of people get confused by the lower time frames and they're getting involved in areas where they should really be selling, because on the swing perspective we are above the 50%. That doesn't mean that you can't buy like in areas here, but we would wait for confirmations and we would have our targets set and stuff like that. I'm not going to go too much into detail, but yeah, this is where a lot of people get caught out, right? So you don't really want to be buying when you're a weekly supply zone, which is presumed to be the lower high, to then go ahead and take out this low here, right? Makes sense? Hopefully it does. If not, be sure to let us know. We can go over things, clear it up for you. But yeah, so that's pretty much it. You really want to be aware of the higher time frames, right? I'll go ahead and delete this, and I'm going to show you on the charts, because it doesn't always look perfect on the charts. Some of you may be confused when you come to the charts, but I don't know what's going on there. There we go. Okay, cool. So yeah, let's go straight to the charts, right? Okay, so how I'm looking at this now is we've got a high, which has then put in this low. This low has then gone and broke this high, so we've had a break of structure to the upside and put in all-time highs here. So how I'm looking at this now is we've got our low to high that has broke structure. So on the monthly, we're just looking to get to areas of demand so we can buy to take out this high. Right, simple as. But in between, we're going to have bearish price action because we need to make a retracement down to the level so then we can go ahead and buy. Hopefully that makes sense. So if we just look here, this low, the internal structure put in this high, then a low, and then this low put in this high. This then got broken, and it got broken from an area that's more clear on the weekly, probably even more clear on the daily. The time frames, as you go down, you can refine your zones. And if you look here, okay, this is some real value here that I'm about to drop. So make sure you've got a notepad and a pen ready. Okay, so we know that this one here is more our major structure, but this is our internal, right? This high here was the high that caused that. So this is our protected high. This here is the last buy to sell that caused both of them breaks of structure, right? But another very important thing to add here is I haven't marked out all of this, which you can do. You can mark out all of it and then wait for your confirmations within here. But the reason why I've marked out just this wick is because, well, this wick took liquidity. So this was simply the banks trapping retail traders. They're like making a nice trend line. So retail are thinking, yeah, that's cool to sell. And then ultimately the banks take out their positions and then fulfill their intention of moving price to the downside. So this wick actually caused that spike of liquidity. So that's why I marked out the wick. And as you can clearly see, it reacts nicely. But yeah, so if I drop down to a daily time frame now, so we know that on the weekly we are bearish. We know that on the monthly we are internally bearish, looking to get to lower demand zones. So let's look at what we're seeing on the daily. Well, you can clearly see here that price is just trending bullish. Very clear to see. If you don't know how to restructure, go ahead and watch our more basic videos on it. Obviously you get this high to low to high, and then it takes like this, but overall we are bullish. Actually goes ahead and taps into a nice point of interest here. Okay, so yeah, you can see that we're clearly bullish, right? So people might be looking for buys here. And yeah, this might be a good area to look for buys if we wasn't in a higher time frame, a weekly point of interest to sell. So yeah, this is where a lot of people probably get caught out in the market. I know that it was the case for me. Even on like the lower time frames, like I'm trading 15-minute and I'm thinking, yeah, this is cool to buy, but like not realizing that we are in a 4-hour point of interest or things like that. Just rookie mistakes that you just learn over time and through practice and just being in the market. Experience is the best teacher. And backtesting and logging all your trades. You need to log all your trades. It's very important, because if you're not logging your trades, you're probably just like, oh, market done this to me or whatever. Oh, market's not good today. It's never the market's fault. It's not that the market isn't trading good today. It's just that you are not sticking to your plan. You need to get a plan together, and you need to learn the strategy first, and then from the strategy, create a plan that fits you, and then just smash it. That's literally it. So yeah, that's why you need to be aware of the higher time frames, and that's pretty much it for the video. So I hope you guys enjoyed it. Obviously, as I mentioned before, the real source is going to be in the one-to-one. So if you want to book a one-to-one, feel free to do so. Might leave like a testimonial channel in the Discord, so people that have had one-to-ones can leave their feedback and stuff. But yeah, that's pretty much it for this video, guys. So I hope you enjoyed it, and yeah, have a good one. So peace. I'll see you later.